Hello and welcome to the show, Your Real Estate Today. I am your host, Paul Jameson, with the Jameson family of companies. That's Jameson Realty, Jameson Property Management, and Jameson Property Investments. This show, if you're a first-time listener or a long-time listener, is about real estate, anything having to do with it and around your home, in your home, about your home. Whether you're a buyer, a seller, or investor, we're going to provide you with information that you can use. And today, I have the privilege, all of the show today, I almost said all day, but the privilege today for the next hour to spend time with Sandy Dickinson with Cross Country Mortgage. Hey, Sandy.
Hi.
Looking forward to the show today. We've got a lot to share. We're going to educate some folks on what's going on in the mortgage business. We're going to talk a lot about some of the inside sections of the mortgage to help people understand that it's more than just putting the money in to buy the house, that there are many things going on. So I'm excited, and I'm excited to hear some more about your new relationship with Cross Country. But as we do weekly, I must first release from my brain what I learned this week. And by the way, just so you all know, the only food that I have eaten so far today has been cake. I have had 3 large cups of coffee and a piece of chocolate cake. So within the next hour, one of 2 things is going to happen. Either I will be talking fast and nonstop, or I will fall asleep. So Sandy will have to take over.
As you crash from your sugar high and caffeine.
Sugar, that's right. As I go winding down through the moon. All right. So what did I learn this week? Here is what I want to share. And you know what? I've been sharing it time and time and time again, especially when I'm working with a buyer or even with a seller, but most of the time with a buyer. You go into the house, you open the door, you look inside. You love the house. But you also notice in the house, there's some drapes that go perfectly with the walls. The outdoor patio furniture is a must-have. Lovely, lovely. Can't do without it. It just makes the outdoor environment. You know, the table that they have in the kitchen, that would fit perfectly for your family. Am I making my point? Sometimes when you look at the piece of real estate, there's stuff that you as a buyer are interested in. Well, my first recommendation is in the initial contract, other than the appliances, certain appliances, leave the stuff out. Because sometimes you can't even get to a consummated contract because you're cluttering the contract with stuff. And sometimes the stuff that you ask for is stuff that the seller doesn't want to let go of, that could have been given to them by their Aunt Bessie. I don't know where the name Bessie came from. Is anyone named Bessie anymore? Maybe. Okay. No one. Will over here shaking, the producer today is shaking his head like no one's named Bessie. Bess. We'll go with Bess. Aunt Bess. She's only Bessie when you get mad at her. But Aunt Bess gave this table to the family. So the next thing you know, buying and selling is emotional enough. But when you add the stuff, it adds a whole new component that you just don't want to do. So my recommendation to you is get under contract. Go through the repair process. Then talk about the stuff. Because what you may find is that if things are on an even keel, or if there are some issues that come up, you can negotiate using the stuff. For example, I guess I'll give away one secret. Now all the other realtors in town that listen to the show will probably do it. When I list a home, I never list it with the refrigerator, washer, or dryer. Now, The reason I do that is because I save it. Even if the seller doesn't want it, I save it so that it can be negotiated around if there are some repairs. So use that as an opportunity. Sometimes patio furniture and other things may come up instead of money or instead of repairs. Bring the stuff into play. And if everything is honky-dory, happy, then buyer and seller talk with each other through their realtors and negotiate a fair, reasonable number for the stuff. Okay? All right. I also want to remind you last week we talked about inventory being ridiculously low in the home sale market. It is. All right. We're still less than a month, about 0.7 months worth of inventory. But I want to give you a real key fact, and I want to make sure this goes in your brain. If you're a buyer and you want to buy right now, there's two things you need to do. Number one is if you find a home that you absolutely love, you need to go ahead and write a backup offer. Why would you do that? Because 35 to 40% of the deals that go under contract right now on average are falling out. So you've got a better than 33% chance that you're going to have a shot at this piece of property. Write the backup offer. That's how you secure and find if it's the home of your dreams. Don't be afraid to write the backup. All right? All right, here's another fact. If you want to build right now, you better be ready to pay up. Lumber, appliances, sheetrock. Not only can you have trouble getting them, you're going to pay a premium for them. Here's what I want you to do. Go to Lowe's or Home Depot and go look at what a 2x4 cost. The prices are crazy. The price of lumber is up 60% right now. Go try to get appliances. Very, very difficult to get, aren't they, Sandy?
Yes, yes, they are.
That's a personal testimony there. All right. If you want to build right now, think about waiting just a little bit longer for some of this stuff to catch up. That's just my thought. All right. Before I go on to more, Sandy, I want to give you the next minute and a half or so to talk about cross country, and we'll talk about it more in other segments. But tell me a little bit about cross country. This is new for you.
It is new. I've moved the entire branch basically to a different company, and it's called Cross Country. It's bigger than Summit. It's got more products. It's got really, really good operations. The rates are probably a little better due to the size and the way it runs. So I'm super excited about it. We now have construction, perm, and renovation products.
Ooh, wait, stop. You have what now? Construction, perm, and
construction, perm, and renovation. Yeah.
Oh, hey, that's awesomeness.
Yeah. Yeah. So that'll be nice because we were brokering some of that out, and they weren't as the products now are just better, I think, and the process will be good because we'll be in control of it.
Yeah, that's great. And you told me today that the speed of the transactions kind of surprised you.
Yeah, so they're on certain loans, they're whipping them through in a week and a half. So that's, if we don't have to depend on an appraiser to get out to the property, which we do get some appraisal waivers, and depends on title work. So sometimes the attorneys and the appraisers are still overworked and a little bit behind. But right. if depending on who we have to depend on, we're getting them all done.
Well, give quickly your phone number in case somebody has to get out of the car.
Okay. Yeah, phone number hasn't changed. It's 704-577-0144.
All right, Sandy, we've got more to come. The Show Your Real Estate today. I'm Paul Jameson here with Sandy Dickinson with Cross Country. We'll be right back. So stay with us on News Talk 1110 99.3 WBT. Welcome back to the Show Your Real Estate today. We got a little bit of funk going on here at the studio. That's pretty good. Actually, I like it. Sounds like a little disco back from my era. That's pretty good stuff. Now that I'm old man. So, I got sitting across from Will here. He's producing for me today in TJ's place, and he's wearing a shirt that I would have worn back in those days. And it looks pretty good on him. It wouldn't look so good on me right now. But hey, that's all right. I'm here with Sandy Dickinson with Cross Country Mortgage, and we're talking about real estate. If you're just popping on, I'm Paul Jameson, your host with the Jameson family of companies. That's Realty, Property Management, and Property Investments. Sandy, what's interesting is, as I was putting this together at 5 a.m. this morning, one of the things that happened to me this week was just a lot of reminders around things that you and I are hearing every day. I was listening to, I think it was Brett Jensen yesterday on the air. He was filling in for somebody, and I think he was filling in for Brett Winterville yesterday. And a guy called in and he said, the real estate market is going to crash. And all of these houses are going to come on the market. The banks are going to be dealing with foreclosures, and everything is going to fall apart. Dogs and cats living together. The whole
total chaos.
Yeah, total chaos, right? And my dad, who is my mentor and my best friend, he's 94 years old. He also said the same thing to me. He says, how do you feel about your business, son? Everything I hear is we're on the edge of a huge bubble, and banks are going to be, giving away houses for pennies on the dollar. So I want to talk to people about that. And I think, Sandy, you and I have had this conversation before. And the reality is that it is not that way. And everything indicates that it's not going to be that way. When Sandy and I's feet hit the floor in the morning, respectively, we're living in the world of what's happening, because that is our world. And we're seeing activity. We're seeing the numbers. We're seeing what's going on in the market. So let me just tell you what stars have to align up for things to crash. And then, Sandy, you fill in where you think I've either missed it or add to it. Okay?
Okay.
First of all, equity has to be upside down, right?
Right.
And right now, are you seeing upside down equity in our market?
No, people have equity and they seem to have cash. So they're good.
Right. You also have to see high inventory. Do we have a high inventory right now?
Oh my gosh. No, we hardly have any inventory.
Okay, we're under 1 month, and people are confused by that. What it means is that if no houses went on the market tomorrow, our market would completely sell out in about 23 days.
Mm-hmm.
Okay, that's not a high inventory. Next, high unemployment. We have some unemployment, yes, in many sectors, especially hospitality, right? And the Cooper sectors. But do you see crazy high unemployment, Sandy?
No, I don't.
Okay. All right. Do you see banks willing to take houses back right now?
No.
Exactly. They don't want them back right now. They're working with people through this period of time. People are getting funds to do that, right? Next, do you see a stagnation in population growth in our market right now?
Nope, we're rocking that.
All right. Here's a little stat for you. 120 people a day are coming into our market.
Wow, that's even more than last year.
120 people. Now, here's what I don't like about that. Most of them are coming from California, Boston, New York, Chicago, New Jersey, Vermont, Connecticut. and they're bringing their votes with them. So they're leaving the craziness they created with their voting, and they're bringing it to us.
Yeah, I don't like that either.
Yeah, we're going to make them sign something when they cross the border. You have to vote differently. Or
Right
use your
way.
vote when you come to North Carolina. Don't send me any hate mail over that. People know I'm joshing, not really. All right, next. Do we see high inflation right now, Sandy?
Nope, we don't.
Okay. How about low sentiment and consumer confidence right now?
I feel the consumer confidence is pretty good.
It's pretty good, right? Okay, so when my feet hit the floor in the morning, I see a very active market, people wanting to move, all joking aside, people moving here because we are in a fantastic place to live. We are in an environment and in a rate environment for interest rates, a living environment, a weather environment, an employment environment. Did I say weather environment?
You did say that.
Okay.
What?
We're in a place that's really great to be. I love living here.
Yeah, it is great.
That's right. You can, Will's over there swinging the golf club. I mean, you got about 2 months out of the year you can't play golf here. And it's a fantastic place to live. And it's growing and there's lots of opportunity. So I don't see all that. I don't see what people are yelling about to try to get you scared. Quit being scared. It's a great time and a great place to be. So take advantage of it. Invest in it. People say, and they said this to you and I both, Sandy, they've said, well, why would we buy investment property right now? Well, it's all about the numbers, right? So if they can come to you and leverage a piece of investment property and get a decent return, why wouldn't they do it?
Right. Right.
And you have a lot of investment products for them to choose from.
I do.
So, it is all about the numbers. And, don't give up on it. The deals are out there. Think through what you're doing and take advantage of this great market. One of the things, and then I'm going to pass over the show to Sandy's topics, but one of the things, we were on a listing appointment the other day, and usually if the granite has not been replaced, if the bathrooms have not been updated, if the Pottery Barn furniture has not been thrown up all over the house, we're saying to people, yeah, let's go ahead and get those things done so that when somebody walks in, they can, the crowd today wants to sit on their butt, put their TV on and not do anything. Well, in a low inventory market, we're now seeing buyers are a lot more tolerant of those things as long as you educate them. Like, what does it cost to put in new granite? And you have a copy of a quote sitting in the kitchen so they can choose whatever kind of granite they want. If the paint isn't exactly their color, we can get those quotes. The house no longer has to be like it jumped off of HGTV. They're a lot more tolerant because they don't have any choices, right?
Right.
It makes a huge difference. So if you're a seller, sit with your agent, hopefully us, and let us consult you through how to present the home, what's important to do in the home. And later on, if we have time, we'll talk about decluttering. If we have time for it, I don't know if we will, but in a future show we will. There are ways you can work with what you have to present the home in its best light. And I think we're in a great opportunity time. Don't you, Sandy?
I do. Yes.
What's your volume like right now? It's got to be way up there.
Yeah. We're closing a lot of loans. We're closing about close to 100 a month.
Wow. All right. So after the break, Sandy, what we're going to start out with is talking about mortgages are made up of more than just money, right? We're going to first talk about what is PITI, P-I-T-I, and we'll go from there. We look forward to sharing more with you on the show Your Real Estate Today here on News Talk 1110 and 99.3 FM. So stay with us. We'll be right back. Here we are, the show, Your Real Estate Today. The sleuthing of real estate. That's what that music sounds like. We're getting ready to, like covertly come into the house and check it out. I kind of like that music. Will's got a whole different repertoire than TJ. TJ's show on Tuesdays and Thursdays, though, is at 6 is not worth missing. It's fun. So anyway. All right. So Sandy, mortgages are made up of a little bit more than money. And I'm Paul Jameson, by the way, your host, and here with Sandy Dickinson with Cross Country Mortgage. It's a little bit more than money, eh? It's got this, first of all, you have to take PITI or pity on it.
Right.
Tell me what PITI stands for.
Well, the P is for principal, and then the I is for interest. So your principal and interest payment is one part of your payment.
Right.
That's what pays back your mortgage, and that's what pays the bank their profit. Then you have taxes. That's real estate taxes. So we collect 1/12 in your payment every month so that at the end of the year when the taxes are due, we have enough money to pay the entire tax bill.
Right.
And then third is your homeowner's insurance. So homeowner's insurance is the insurance that protects you if the house burns down or somebody gets hurt on the property. And same thing, we collect 1/12 of the annual amount per month so that we can pay that when it's due. And then sometimes you have mortgage insurance, depending on your loan to value and your type of loan. And that's an insurance that protects the lender in case you default on the loan. And that's the entire mortgage payment. If you have homeowners dues, those are always paid separate to the management company or to the homeowners association.
All right. So let me ask a dumb question about this, about mortgage insurance. I'll let you bring it up. Okay. So the buyer is paying insurance premiums on the chance that they default on the loan.
Right.
Okay. But let's say they do default on the loan, right?
Mm-hmm.
And the mortgage insurance kicks in, and it makes the bank whole, right?
I don't know about whole. If they will pay a certain amount of coverage. So the higher the loan to value, the more coverage they'll pay. So on a 97% loan, they'll cover 35% of the loss. On a 90% loan, that's only 25%, and on an 85% loan, it's 12%. So,
so they're really, it's really just a fraction then of what
right.
the actual loss is.
Because lenders pretty much always lose on a foreclosure. They don't want a foreclosure. They have a lot of cost associated with it. They have to keep the property secure. They have to keep the yard clean. They have to do inspections. They have to go through all the legal mumbo jumbo. So it's expensive to foreclose.
Right. Remember what we said before when we were talking about our market, that the banks really want, they don't want foreclosures. They don't want to take these houses back. They're going to work with people to the nth degree. And when you combine that with the fact that there's equity in them, people are able to sell versus give it back to the bank and repay their loans in a lot of cases.
Right. So yeah, the answer would be throw it on the market if you're about to lose the house and let an awesome realtor like Paul sell it for you.
Amen. Oh, funny you should say that. All right. So Jameson Realty, 846-946-3663. All right. So Sandy, how do you get rid of mortgage insurance?
So on conventional loans, you can get rid of them if you chose the monthly payment. Or annual or monthly payments. So there's lots of types of mortgage insurance. There's single premiums, there's monthly, there's something called a split rate premium where half of it's financed and part of it's monthly. So if you want to get rid of the monthly, you pay down your mortgage to 78% of what your initial purchase was. Or if you feel like you've received the 20% equity position through appreciation or at a combination of appreciation and paying it down, then you can request from your lender, your servicer, to remove the mortgage insurance early. You don't have to refinance to do that. They will probably ask for an appraisal. They'll probably want to make sure you've been making your payments on time so that their risk is mitigated. And then chances are they will let you delete it if all those things are applicable.
Right. So, I mean, I'm generalizing. What would an average, say, on a $250,000 home? What would private mortgage insurance?
Well, depends on your credit, believe it or not, and your loan to value. So if you're only putting down 3 or 5% and your credit is in the low 600s, you may be paying $400 a month. If you have a high credit score of 740, then you may only be paying $50 a month. It can change. It can vary that much. And the more down payment you put down, every 5%, you get lower insurance premiums, mainly because they don't have to cover so much, like we talked about before.
Right. So another dumb question, and probably why I assume once this policy is in place, when you buy, you either get rid of it or it doesn't adjust. Like, let's say you had a 620 credit score and you work to rebuild your credit back up to a 750. They're not going to adjust their premium. It's where you purchase.
No, they're
right?
not.
Okay.
We do level
right.
premium coverage, so it stays the same.
But the interesting thing about what you said is that if you think about the one lump sum versus the monthly or the payout approach, if you pay the one lump sum up front, you don't have a chance to recoup any of that, right? So you just...
Some of them are refundable, but the better rates are the non-refundable. So if you're going to be in the house and you have a high loan to value, it might be worth it to do that, or you can finance it. We have lender finance coverage. Sometimes we have lender paid coverage. There's so many options. So we can raise your rate and we'll cover that premium for you. Or you can finance it into your loan amount in certain cases. And single premiums sometimes are pretty cheap, depends on your loan to value and your credit score. So sometimes it pays to look at the different options.
Right. Well, in that same subject matter, if you're reducing your principal and you're looking at eliminating your private mortgage insurance, or even if you're not, you can do something called recast.
That's right. So you get a big bonus, or you sell another property, or you just come into some money with whatever, lottery, inheritance, and you want to pay down and you want your payment lower, then you can ask for a recast of the mortgage. And so it's usually a small fee, maybe $300, and they'll re-amortize your loan for the remainder, based on the lower principal balance, and that will lower your loan amount on your payment. Yeah.
So just to give you a great example, I did that a couple of years ago, and had it recast, and it lowered my payment by about $400 a month. So it was well worth doing, and it's something a lot of people don't know that they can do. They think they just have to go out and refinance. Well, if you don't want to go through that hassle and you make a large payment, having that recast option is pretty good. Most lenders do that, don't they? You do it.
Yeah, most lenders do. And it's really key right now because a lot of people want to buy before they sell their current residence because they're afraid they can't find something they like if they sell. So they'll buy that residence, and then when their current sells, they take their profit and pay it down and recast their mortgage. They don't have to worry about refinancing.
Yeah, that's great, because you want to keep these great rates that we have because they're kind of going up a little, As
long as they last.
Yeah, absolutely. Well, when we get back from the break, we're going to ask Sandy to talk with us a little bit about what mortgage underwriters do. They're the people that are the mystery people in your world, right?
That's right.
Yeah, we're going to talk a little bit about that and much more. And we may even talk about how to make a mortgage underwriter happy.
Can we say chocolate and wine?
That's right. Chocolates and red wine and soup pie from Mrs. Colliner, my favorite. Thank you very much. We'll be right back. The show Your Real Estate Today here on News Talk 1110 99.3 WBT. Stay with us. The show Your Real Estate Today. It's Paul Jameson. Welcome back. I'm with the Jameson family of companies here with Sandy Dickinson with Cross Country Mortgage. If you're interested in refinancing or purchasing a home and you need one of the best mortgage lenders in our market, you need to call Sandy at
704-577-0144.
704-577-0144. And, you know, if you are thinking about selling, and we talked about this earlier in the show, and you really want to know what your home is worth, what it looks like, a plan to put in place. Here's one thing for sure, and I've been running these spots lately, and I just want to put it out there so everybody really hears it, not just in a commercial, but from me. When you work with us, you're not going to get a disclaimer. You're not going to get some conditions apply at the end of the commercial. All right. Everything that I do and everything that we work with as a team, we don't use loss leaders to win your business. We earn your business. And that's really important to me. And I'm just not going to do business any other way. So if I'm a right fit for you, if you want to sell your home that way and you believe that's the right way, and you know, I always struggle because I think people leave a lot of money on the table, but I want to be the guy that takes you through the whole process, not just getting the house under contract, but getting you to the finish line. And I think that's really where we earn our keep, and getting the most money we can for our sellers and making sure that our buyers are protected. And it's what we do. And, you know, Sandy, when we talk about the mortgage industry and we talk about getting the transaction done, that's the one strong thing I can count on with Sandy. And that's why I'm wave the Sandy Dickinson flag, is because I know she's going to take care of my clients and we're going to get the deal done. It isn't going to, she's not going to be the holdup. And when it comes to the funding table, the money's going to be there. Right, Sandy?
That's right.
Yeah, she always has. Never let me down. It's great. It's a great feeling. All right, Sandy, let's talk about what does a mortgage underwriter do?
So typically, the mortgage underwriter will validate the information that we provided. So we run loans through an automated underwriting system with a certain amount of information. And that data is in the documentation, the bank statements, the pay stubs, the W-2s, sometimes the tax returns. We put it all together and wrap it up in a bow, and we send it to the underwriter. And that underwriter will go through each section and she validates it. She reads every line of everything. She recalculates the income to make sure that we've done it correctly. She checks for deposits. She checks for loans on your bank statements that you may not have disclosed. She has to make sure that that loan is sellable to the investors. And when she puts her name on that and she signs off, if it's not, then there's a lot of trouble for that underwriter. So as much as you know, we don't really like what they do to us sometime with their get me this and get me that, they really have a lot of responsibility to the company to protect the goose and make sure that the loan is sellable to the investors, because if it's not, then that costs a lot of money.
Right. Well, let's take a step back too. One of the things I hear you talk about all the time is that you're putting together the file for the underwriter.
Mm-hmm.
And a lot of us that are self-employed are a little bit more difficult to put together for the underwriter.
That's true.
And so those files tend to be a lot more complicated, but in your experience, you know how to package it to answer those questions to make the underwriter's job easier.
Yeah, so you have to put it together so that it flows for her. Otherwise, it could take her hours and hours and hours. So we do that work so she doesn't have to. So we want all the pages of the federal return. We have to know how that business is filed, whether it's sole proprietor, LLC, C Corp, S Corp. And then we have to, if you own more than 25% of the company, we have to have the business returns. We have to have P&Ls, which a lot of people don't know how to do. That's a profit and loss. We have to have balance sheets. Business owners don't always keep up with their numbers like they should. So we look at them to make sure that they're still in business and it's viable and that it's still working, especially now with COVID. We look at the bank statements now. It's a process.
Yeah, you know what's interesting is I have this, I don't know, preconceived notion of an underwriter as someone who sits in a dark room at a desk and they've got like files stacked up like 6 feet and they're like behind all these files and they have a stamp that says yes and a stamp that says no. And they're just like this mystery person. They're really not that though, are they?
No, they're not. It's not like America's Got Talent or whatever. It's a no for me. It's a yes for me.
There's not like an X button and a golden,
and everything's buzzer. Online, right? Yeah. So we send it over digitally. So they have their asset section, they have their liability section, they have their employment. So it's cash, credit, income, and then they have to review the property. So even if the borrower is perfect, that property has to make sense and that value has to be there and it has to be marketable. So we forget about that piece sometimes, but they have to go through that appraisal with a fine-tooth comb and make sure that the value is supported and that there's nothing crazy with the property that could cause it to not sell if we have to end up with the property back.
Right. All right. So I came up with 5 little things that a mortgage underwriter would need to be happy. So I'll read them to you and you tell me how off I am on this.
Okay.
I absolutely made them up. All right, here we go.
Okay.
Ready? Number 1, a clean file. Yes or no?
Yes.
Okay. Number 2, a lender that knows what they need before they ask.
Yes.
Responsiveness under the stress of handling many loans.
Yes.
A lender with experience.
Yes.
A little love.
A lot of love. A lot of love.
Yeah. I mean, I hear that each office they have their own bathroom. That's what I heard.
Yeah, we like to send them treats during the holidays, or if, they like good recognition because they are in a stressful job and they don't get a lot of appreciation and they get a lot of pushback and why did you say that? And why are you doing that? And why don't you approve my loan faster? And why do you want that? I don't want to go back to the borrower and get that. They get a lot of that.
Yes, I love you, but send me another set of bank statements, please. I understand. Or that back page that says intentionally left blank.
Right. We have to have that.
Golly, I'm like, come on. What the heck? Nobody wants that. You want the envelope it came in? Come on.
Sometimes we want the envelope.
I'm telling you, it's crazy. All right. So we don't have a lot of time left, but in the time that we do have, if somebody is really thinking about, Sandy, about refinancing, about a mortgage, they need to get to you early, right?
That's right.
I mean, I think it's good to know and to have in this market and be prepared with the right kind of letter. So one more time, how do they get in touch with you?
They call my mobile phone, 704-577-0144.
704-577-0144, Sandy Dickinson with Cross Country Mortgage. And if you want to buy or sell or interested in investing in real estate, or you're an investor and you're tired of managing your own property, we would love for you to call us 704-846-DONE, 704-846-3663, or on the web at myjamesonhomes.com. realestatetalk.com. Look for us soon in our new location in Gaston County, and we're excited to spend Saturdays with you. We'll be talking to you next week. God bless the show, Your Real Estate Today, here on News Talk 1110 99.3 WBT.